Hey guys, back with another update video. It is during market hours. It's Monday, May 11th. It's 1:44 p.m. So the market, interesting today because it opened up pretty red, but then slowly throughout the day, stock's been going up. I mean, AMD absolutely took off from this morning, even while a lot of the other stocks were red. It's up to around $55, almost $56 right now. Kind of wish I had bought some puts early in the morning, but my hypothesis was that today was going to be a red day, so I held off. So I don't have any positions on any stocks right now because I think if I buy some cash secured puts right now, the premiums are going to be really low because AMD is already on its way up. If I had got in earlier this morning, I could have bought $50 or $49 strike prices as far as the cash secured puts on AMD. But now, because the share price is around $55 for the same premium, I would have to get in at around $52 or so, 52 and a half maybe. So I'm going to hold off. Maybe in an hour or so during power hour, maybe AMD will start dropping again if people start selling off, and that would mean that I could get cash secured puts at a lower strike for either the similar or a better price than they are right now. Or I might just hold off until tomorrow morning because who knows what's going to happen overnight and then pre-market. So I'm leaning towards actually not making any plays today unless something drastic really happens between 3 p.m. and 4 p.m. Eastern time. The other stock I was really looking at that I mentioned before was IWM. That's the Russell 2000 ETF. That also started off in the red, but recently just got into the green by a little bit. And we're talking like less than 1%, but it's still green nonetheless. I was looking into getting into this stock as well sometime this week. So again, I'm going to wait and see what the market does around 3 p.m. today, 3:30 p.m. See if it's a good time to get into IWM. And then the other third stock was Space, SPCE, which is Virgin Galactic. And similar story. I'll show you that chart next. But as for IWM, in terms of selling the cash secured puts, I was really looking at the $127 strike price because I think that gives me a good amount of premium, but also is a good distance away from the current share price. So let's end up buying end of day today, end up selling end of day today or early tomorrow morning. That is already 1 day down for this weekly. So I would need in 4 days only for IWM to stay above 127. And the nice thing about IWM is that it's an ETF. So let's say I do get assigned the shares. Being an ETF, over time, it should get back up to 127 or above. It might take weeks, it might take months, but it's almost a guarantee that it will come back up. So I don't have to worry about the stock going to zero if it's a crappy company, because it's not a company, it's an ETF of the Russell 2000 stocks. So when I get enough capital, I really want to get into IWM and SPY and QQQ, but my portfolio just doesn't have that much cash value right now to trade them. But IWM is doable because at $127, this would tie up $12,700 in collateral. So I could be able to get a contract or two, depending on if I have any other plays on. But I think I'm looking to make an IWM trade sometime this week to see how that goes. And then the last stock I mentioned was Space or Virgin Galactic. And that stock is still in the red, which is good if you want to buy a cash secured put because that means these are going to go up in value. But my concern is it's red today. Is it going to be red tomorrow, red Wednesday, Thursday, Friday? Meaning, is it on a downtrend? Because it's trading at $19. I was looking at the $17 strike because it gives you a really good return on your risk. I mean, actually, of the three stocks I've mentioned, this is the best because if you think about it, you get $23 for $1,700 worth of stock. And that's almost a 1.4% return on your risk, which is really good because it also has about an 84% probability of profit. So let's say you have a $25,000 portfolio and you buy a bunch of these $17 strike contracts. You could get 14 of these contracts. And $23 might not sound like a lot per contract, but if you do $23 per contract times 14 contracts, that's $322 if you were to sell roughly $25,000 worth of space as far as cash secured puts and hold it to this Friday. That's really, really good return on your risk. But the catch is Space is a debatable company depending on how you feel about it, because let's say I do get assigned shares. Let's say Space just continues to drop and I get assigned shares. I would get assigned 14 contracts times 100 shares. That would be 1,400 shares of Space if I were to put my entire portfolio into it. And then who knows if it goes below 15, 16, 17, who knows? And who knows how long it's going to stay there. So it's more of a riskier play. So again, it's a risk to reward ratio. I really don't want to put all of my money into Space, because then if I have all of my portfolio tied up into shares, if I get assigned shares, then I can't make any more plays. I just have to wait for Space to come back up while selling covered calls. But I just don't want to have all my money tied up into one stock if I can help it. So that's why I was looking at maybe making an AMD play, maybe an IWM play, and maybe one contract of Space this week, just to see how Space reacts, how it plays out, so I can get to know the stock. But I'll keep you posted. One interesting thing I came across this weekend was SPY keeps bouncing off the 290 level roughly. And one interesting thing is if you draw the Fibonacci retracement from SPY's highs all the way to its valley right there, the 290 level is at the 0.618 Fibonacci retracement level. So if you're into technical analysis, SPY keeps bouncing off this level. So you can see it bounced up here, came back, bounced off the lower level, came back. So it's kind of playing ping pong right now between these two levels, the 0.5 and 0.618 levels. So one key thing to watch out for is if in the coming days we actually break above the 0.618 level, that means the next boundary is going to be the 0.786 level, which is a SPY of around 313, 314. So if we can get one daily candle above this level, and then the next day's candle stays above it as well for confirmation, then we should really be long stocks, because the next barrier is at SPY 313 or so. If we get candles that stay below 290, like right now, SPY keeps flirting with the 290 number. And if we get candles that stay lower, then this may be the top for the time being. So that means that you might have more red days in the market ahead. So I've been keeping an eye on this because it's actually pretty interesting if you believe in technical analysis. So that's also why I'm kind of staying at the market today. And I may end up staying out of the market tomorrow, because let's see how the market in SPY closes today. Let's see what the market does tomorrow, because you don't want to be buying puts when SPY or the S&P 500 is at this ceiling, because then in theory it should be going down, which means your cash secured puts are going to get tested, which is not what you want. And that means you're going to get assigned shares, which if you're like me, you just want to milk premium out of these stocks. So this was an interesting thing I saw. So I'll be keeping an eye on SPY and these Fibonacci levels, and we'll see how it plays out. Thanks again for tuning in. Let me know if you made any plays today or if you have any plays on this week. As always, if you have any questions or comments, leave them below. And as always, happy trading.